Per usual, if you're on this channel for educational purposes only, is not intended as financial advice. It is Teaching Tech Tuesday. Let's take a look at some basic entry and exit strategies. Been getting some questions about what do I do specifically in specific situations. So let's go through a few of these, but just to not bury the lead, there are people who have mixed amounts of various cryptocurrencies. They're on the sidelines. They've got nothing. They're all in cash, whatever. Any of these strategies applies to that type of thought process. You can use all of them at once. You can use your specific strength. If you're poor at it, if you're very bad, for example, I'm very bad at the news-based entry, anything around trading on some headline. I'm terrible at it. I've always been terrible at it. I just don't do it. I know that's a weakness for me. Some people, they're the opposite. They love news. They love economic data, headline, whatever, right? That's just not my bag, so I don't talk about it because I don't do it. If breakout entries aren't your thing, you can either learn to get better or just avoid them entirely. With the news stuff, again, like how much of that's priced in, how much of that matters for price, that's my difficulty with news. But at this point, I like to focus on my strengths, and it's hard to teach an old dog new tricks. So for entries, one man's exit is another man's entry. You got to keep that in mind too. Just because I'm talking about long entries here doesn't mean that this doesn't apply to short entries. Some of these will be hedging entries or short entries. Some entries into cash are basically exits out of crypto, right, etc. So you got your breakouts, chart patterns, Williams fractals. We can talk about that. Pullback, that would be a Kijun bounce type entry or a mean reversion to a specific moving average, that type of entry. Reversal and pullback are related, but for the reversal, let's say you're waiting to hedge something, right? Maybe you're waiting for a confirmed bearish divergence on the daily. Maybe you're waiting for Bitcoin to break a Williams fractal support to close some alt positions, right? Maybe stuff like that when we're talking about entries and exits isn't just breakouts and pullbacks or the cloud. It's something different, right? And then, of course, indicator based, you got your moving averages, your cloud, whatever other indicator people think of. There's an infinite amount of indicators. But again, I would stick to what does well in backtesting. What are you comfortable with? What has been successful for you? A lot of this also comes down to intuition. I can't teach you intuition. You need to get the reps in and see which environments you thrive in and which you don't. And if trading on a weekend that's a holiday, that's low liquidity, was awful for you, maybe don't do that again, right? Write that down in your mental notebook that, hey, maybe I don't need to be trading on a US holiday. For exits, similar but different. Some people love the fixed percent stop loss. So they'll say, on each position I take, I never want to lose more than 2% from the entry, 5% from the entry, or a fixed trailing stop loss the same. I never want to give back more than 5%, whatever it is for any position. I prefer trailing stop losses just because it's kind of less mental gymnastics. But if you want to continuously move your stop loss, that's fine. There's a way to do that on Kraken Pro as well. You can have a fixed trailing stop loss for positions, but you can use the Williams fractals for entries and exits. Generally, the idea here is if you're making higher highs, that's an entry. If you're making lower lows, that's a stop loss. That's an exit for a long anyway. A lot of people are kind of allergic to adding to positions. They're real comfortable maybe with buying lows and entries, but then they're not comfortable with adding on breakouts as much. And that takes experience, definitely. You've got support resistance exits as well. Again, moving averages, we're talking about maybe coming off a low to a moving average to the 200-day moving average, or yearly pivots, which backtest extremely well for BTC, or just generic Fibonacci levels that you're watching based on extensions. Indicator exits, again, the cloud, TK cross, price in the cloud, basic stuff from the cloud perspective. And then you've also got your time-based exits, which all of us inherently who have been here for multiple cycles are looking at. We're all thinking about, what are we going to do come the end of the year? What are we going to do if the cycle's over? Is the cycle over? There was a lot of talk about left and right translated cycles. I couldn't really care less. All I care about is, what am I going to do if and when I think the cycle is over? What should I look for? What should I be looking for? Generally, that happens Q4. Doesn't really happen intra-year per se. So if come January we look rather weak and we're printing bearish stuff, I will more easily be selling, definitely. And just in the near term, June has not been a great month post-COVID for BTC. So that's also a consideration. You've got this sell in May and go away summer lull period that we're entering here. Just something to be mindful of. Do I need to be 40x long here at the top? If there isn't some really good evidence in the near term, maybe not. Maybe I wait and see. Maybe I'm a little more patient for the pullback entry if I don't see breakout activity, breakout behavior. I've talked about this stuff in a few different videos in a few different ways. You can set up a list for yourself on specific things you're looking for. And this shouldn't take a lot of time to update this. You could just do this once a week and say, okay, what does this look like? What does this look like? What does this look like? Done, right? It shouldn't be too hard to formulate a plan for yourself. Maybe you just want to hit a specific percent above your entry on a trade. Maybe you want to hit a specific net worth, whatever it is, write it down, look at it once a week and be done with it. I wouldn't stress too much about every little movement intraday. That's where people really get into trouble because they're over trading and they just end up losing money. I talked about the price discovery video, all-time high, checklist. All this stuff is, classic greatest hits of Carpe Noctem. Talked about this stuff ad nauseum, but I'll put a link to this in the description of this video. We also talked about portfolio rebalancing. That's another way to do like a dollar cost averaging entry and exit strategy where you're just taking your own hands off the wheel. Maybe you take a specific amount of your portfolio, knowing we've got weak seasonality, but we've got this time-based exit for us. In the end of the year, you take, 25%. And you say, I'm going to put those orders at some level on the book now. And if they don't hit, I'm going to dollar cost average. But the last thing you want to do is be swinging your entire account, your entire balance in and out constantly. That's a recipe for failure. I would separate this into buckets that you're most comfortable with and go from there. Some people are holding until 2030, right? That's fine. Maybe that's their time-based exit is 2 cycles from now. That's okay. More granular and specific, if we're looking at ETH, on Sunday I was talking about a lot of the stuff could have been an M double top, and maybe Legacy Open is bullish and we cancel that. That appears to be what is going on here. Maybe this is a flag, maybe it isn't. But for someone like me who has 0 ETH exposure and 0 interest really in getting any ETH exposure, one thing I could do is look at the Williams fractal. I could look for a chart pattern. Is this an ascending triangle? Is this a flag? And then what is the cloud telling me? The cloud's telling me on trend, we are clearly flipping the trend. We're in the process of flipping the trend. So maybe I buy a little bit. Maybe I add a little bit to a position. But again, maybe I'm not 40x long here if I'm not confident yet. Looking at where this could go, we can either measure the depth, which gives us the 3K target, or we can measure it, the pole of the flag. Now, a lot of people are going to want to say, oh, I know this is going back to all-time highs or whatever. That's fine, and that's probably what I would want to get out of this trade if I were to enter here. But that's part of the game. What is the plan for the trade? What is the plan for the setup? This is the best ETH has looked on the daily since November 2024. I liked it better back here because it was flat for an extended period of time. But this is just as easily tradable as it was back here. You'll notice it tried to get out of the cloud. It couldn't break the cloud for a long time. And we tend to see this. The cloud just knows. That's where the resistance is. Sounds like voodoo magic, but just backtest it, right? So here we are. Not a lot of bearishness on this. Another low time frame idea would be Sol. If we go to the hourly, you can see it's in the middle of the cloud there. Not much help. Turn off pivots for now. Hourly to me kind of looks like an inverted head and shoulders. You can clearly see a level there. So I don't hate Sol here either. So what do? Well, maybe you watch the fractals on low time frames. Maybe you watch the fractals on high time frames. Upside appears decently limited based on where the cloud is sitting. And maybe you work that into your equation of sizing where this isn't a great setup here. Generally, maybe your stop loss is like 170, 169, and you take it from there. Maybe you nibble a little bit, but sizing should depend on confidence of the setup. This is kind of like wishy-washy no man's land here on high time frames, whereas ETH certainly looks, again, better than it has in a long time on the daily. Better than it has in a long time. And then you've got BTC, which is kind of a mixed bag here, honestly. Like, yes, it's at all-time high. Yes, it looks totally bullish. Where do you want to add? Where do you want to subtract? That's the question I'm always asking myself. Why do I want to do any of that? And what am I using to decide how to do that? What does the decision-making process look like? can see there's a Williams fractal at 106.6. I want to be out of everything at 106.6 in a big way because the downside risk is 93.3. The cloud tends to pick this stuff up rather early. And back here, we didn't quite break down until much later. But even if we go nowhere and we get a TK cross at like 100K, that is another exit sign based on the indicator. Williams fractals like an entry at all-time highs, which makes sense. Higher highs, if we break them, would give you an entry based on Williams fractals. But I'm not in love with this setup. So for me, that means sizing down, leverage down, just be careful because we've been running hot. 7 going on 8 straight weeks of straight up, 8 green weeks. We rarely see that. And we have never seen 9 straight weeks bullish. June tends to be bearish. So it is a mix of everything. It's a mix of time-based. It's a mix of seasonality. It's a mix of breakout trading and indicator, right? And we've also got, I think max upside here would be 120 if we see that. Another good exit level based on the yearly pivot. So this is just one specific example in one moment in time. But the more reps you get in and the more charts you look at, not that you should be looking at 10,000 charts, but not all markets are going to be behaving the same at the same time, right? If we just contrast this with IWM, this is small caps, this is Russell 2000. To me, this looks like a massive inverted head and shoulders. Okay, I know what to do there. I've traded these dozens and dozens of times. You pull the fib, take the high, take the low. It gives you a range. It's hilariously up here at 237 to 254. Fine. We can then, if we want, if we don't just accept it in our mind, where this risk reward would be, we can always measure it. So we get an R&R of 3.6. That's excellent. I'd put a stop loss here at anything below the right shoulder, as you would normally do on any head and shoulders pattern. So for this pattern specifically, I like to always nibble. Like this is 95.5% of the way there on the pattern. So it is a high duration, slow moving instrument that is almost ready. And again, it tried to break out of the cloud, got smacked right back down. So I like the pattern. I like what the cloud is saying here in a possible breakout. I like that this has been bearish for a long time, but it is IWM. So maybe you bring your sizing down. Maybe you trade other stuff. Maybe you use leveraged instruments like TNA. TNA is 3x IWM, same thing. You've got inverted head and shoulders, edge to edge, whatever. You know, it's the conglomerate of bullishness that you'd want to see here. So after you've traded multiple years, ideally you're getting in multiple situations, both up and down. You're looking for reversals. You're getting comfortable with which entries and exits you prefer, where you've seen the most success. I would do more of what you're good at and less at what you're bad at. That sounds obvious, but a lot of people lean into the bad stuff. They love to, you know, it's like if I traded on news, I wouldn't be here, okay? Just flat out, I'm terrible at it. So I just avoid it. I like to be on my deserted island. You hear me say that metaphor often. And I also wouldn't be opposed to employing multiple strategies at the same time, right? Let's say something isn't perfect, but it's good enough. I like adding. I like being in the market. I like being a part of it. I like opening a little bit. I like having a size in mind generally for a position and then going from there. That's why it's always best when you're opening a position to have targets in mind, to have a path in mind. Rivian's another example. Again, this is just a moment in time, but I like the possibility here. I like the possibility of a 2x plus here. So I'm not going to be afraid of adding. I just, you know, I could be unbothered until this breaks 10. What do I care? I think the upside is skewed strongly positive. ENAs is another example, similar vein. If things are actually going to be bullish, this should have no problem breaking out. The issue is it's gone nowhere, right? So what do I do in this situation? I just keep adding. I just keep adding until we break the stop loss. But you have to get comfortable with the uncomfortable. Don't let the perfect be the enemy of the good enough when it comes to trading. And play around with your entries and exits. If you don't like using Williams fractals, just use a fixed stop loss or use specific levels. Or if you're finding every time you measure fibs, we fall a little bit short, maybe you measure it and you just pull it back a bit on your initial exits. That's all I have for this one. If you like, dislike, comment, share, subscribe, and happy trading.